You gotta be flipping my flapjacks. How about that public count? It seems like it's just stuck right now between that 3.8 and about $3.95 million number. It was a good day here today, up $34,000 in the public count. Some stocks making some massive moves out there. Some of the Jack Jackson stocks, the MJ stocks like the Planet up 23% today, Avant up 16%. You know, stocks like Shopify making big moves on some big news here today with some huge potential increase in their business model. 6% move. Celsius was up another 4.5% today. PayPal making a big move, 3.5%. Winning Resorts continues to win. That stock is now up over 100%. Over 100% from those April lows. Check this out. I posted this on my X page here today. I always link my X in the description area down there. It's part comedy and part serious as far as me on X. If you know, you know, okay? But I put two rich people stocks heading in different directions in 2025. Wynn is up over 50%. 2025, far outpacing the NASDAQ, far outpacing the S&P 500, even beating a lot of stocks like even nvidia, right? RH, on the other hand, is down 50% in 2025. Who wants to take a crack at why this is occurring? Now, Starbucks, you hear news like this, 100 North American locations, a bunch of people are freaking out over this. I believe that's like 1% of their customer or their store base, so do keep that in mind, right? Now, RH, it's been a brutal 4 years for RH. Look at this stock. It's down 71%. That's versus the Qs and the NASDAQ, which are up 49 and 60%. Unbelievable, right? Now, since February, Cava stock, look at this one, down 58%, where S&P 500 is up about 10%, the Qs are up about 13%. Unbelievable, right? And this is really scary. Do you know why that's really scary? Before we go any further, let me just explain. All these stocks that are getting obliterated so far in 2025, they're really scary for two reasons. Okay, let me explain this before we get into the core of this the video. I think it's important. Okay, I just got to make this point. First, this is a year where the market's doing really well. How much would these stocks be down if the market was not doing well? Number one. Number two, even more serious problem for the next 3 months for these stocks. Guess what it is? Tax loss harvesting. These stocks that are down 40, 50, 60% this year, listen, a lot of people have made a lot of money in other stocks. So come November, December, people start looking, they say, okay, I need to write off some losses against some of my profits I've taken this year. So where do they look? Well, they look to their losing stocks. Like, oh, if you own, let's say Cava stock, people are going to look at that stock and they're going to be like, I'm down huge in this position. Let me cash shares, which adds an immense amount more of selling pressure. They're going to look to stocks like UPS. They're going to look to stocks like RH and all these others that have absolutely sucked this year. All the fund managers do the same exact thing. And so what ends up happening is these stocks that have been brutalized on a year like this, they get brutalized even worse. It's a horrible situation to go through if you're a shareholder because you just go down further and further and further, okay? All right, guys, 4 core subjects I want to speak about in today's video, okay? First subject is my thoughts on the MJ stocks. Obviously, massive moves across the board. I mean, almost all the MJ stocks were up between 10 and 30% today. What is my thoughts on that in the space in general, right? As somebody that's, I own a couple speculative stocks in that space. By the way, every single stock in that space is speculative, just so everybody knows, okay? Number 2, Wynn versus RH. What's going on there? Why is Wynn stock so incredibly strong? Why does it just keep going up, right? Why does a stock like RH just keep going down? We'll speak about that. Third subject up here, we'll talk about stocks that are really strong on a day like today, like PayPal. Celsius has been incredibly strong recently, right? And just had an incredible year and really the past, even 6 months. Shopify, are these stocks going to keep rolling, right? Shopify has been an incredible performer. Remember, Shopify is, touching right around 150 right now, right? Shopify was $25 in 2022. $25. Is that stock going to keep rolling from here? And then I'm going to share with you my possible buys watch list and give you the order of importance in terms of looking at all those stocks. Okay, this one's my first preferred stock I want to buy next. This is my second. This is my fifth, etc. Okay, I hope you guys enjoy this one. There's one thing and one thing only I need from you guys. If you could please just hit the like button, the little thumbs up button, if you can just make it glow. I'd appreciate y'all. I hope you appreciate these in-depth videos I put out for you guys day in and day out. That's all I need from you guys. And for everybody that's already done that before I even had to ask for it, thank you to you. Additionally, if you want to see more of my videos in the future, be subscribed to the channel. Not sure if everybody's subscribed here, but if you're not subscribed, there's a less of a probability YouTube will show my videos in the future. So if you're subscribed, you enjoy my content, you want to see more of it, make sure you're subscribed to the channel, okay? Additionally, the pinned comment down there here today will be if you're looking to apply to join my private stock group, private wealth group, get access to 1000xstocks.com, the premium research platform, as well as access to all of my course curriculums, Become a Master Stock Market Millionaire Playbook, Stock Options Mastery, Dividend Investing Mastery, Financial Statements Mastery, how to properly value stocks, access to the private Discord chat, the 6, 7, 8-figure community. Boom, boom, boom. Okay, that will be pinned comment down there to apply for access. Okay. Alrighty, guys, let's get rolling here. The Jack Jackson stocks. What's going on here? Listen, when it comes to these stocks, I mean, they've just been an incredible disappointment. These stocks, they show so much promise, right? In these stocks in this space. And the reason they show so much promise is we know this is a massive category in the United States of America. The amount of this product that is enjoyed by Americans on a daily basis, right? And obviously it's a product that's worldwide, but I'm just really speaking about the United States of America and the American companies that are participating in this space, or the Canadian companies for that matter, right? Like, it's not like this is some secret, like, new product service that people are like, oh, I don't know if there's a market for that. No, there's a huge market for that. This is based upon estimates from a few years ago. Basically, the legal market here is $75 billion. I wouldn't be surprised if that number's low, right? No, the legal market's an issue in many ways, right? Because at the end of the day, if somebody gets caught selling the product, they have to go to jail, which is actually a stress on the financial system, right? Because you take that person out of the economy, spending money, making money, things like that, and you throw them in jail, okay, that costs a lot of money. So, like, that's not a good situation. Additionally, if this was all, imagine if the government was able to make money on all these sales that are going on, right? That's a lot of sales tax revenue. That's a lot of money to the federal government even, right? Local governments, like, it's a huge deal. It's a lot of businesses that could be started, that would be successful and hire people and all those sorts of things, right? So now the price difference is a main issue. The government's always been the issue here, okay? It's not like this is like, oh, people want to go out of their way to buy this product illegally. They don't want to do that. People would love to if it was available, to buy legally for the same price they get it on the streets. But the issue is the government's in the way here. The government has basically the government acts like they want like this to be a fair legal market, but they don't when it comes down to the numbers, they don't. When you look at the numbers, it's brutal. It's almost impossible to compete with the legal market because of all these different taxes that are levied on these companies. They can't write off certain things. So we need a whole reclassification of this space. Now, Trump has teased the idea over the past month or two about reclassification. We got to see if that happens. If that happens, it's massive for the category, and we can start going from there. But the issue is the whole space is basically hindered by the government. And the government sucks. They suck. Both parties suck. Okay? They're horrible. Horrible. Awful. I don't know any other way to put it. They're horrible. And so the thing that sucks about this space and why you can't get any continued momentum, and these stocks might be hot for a day, for a week, but it's just like the government. They, on the state level and the federal level, they get in their way constantly, man. And so it's an unfortunate situation, but it is what it is here. So stocks like the Planet, right? Perfect example. $100 million market cap or so. It always feels like this could be a stock that 10x's or 100x's, right? Like, oh my gosh, like with the amount of locations they have, with the brands they have in this space, like they could be the next Anheuser-Busch, right? They could be the next, Jack Daniels of the space, blah, 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 right? It always feels like that, but the issue is the government never gets out of the way, so we aren't able to fulfill that like 10x to 100x opportunity where it's like, okay, this company could go from $100 million market cap to $1 billion market cap or a $10 billion market cap, right? $10 billion market cap for the Planet, you got 100x there. It's incredible, right? And it's not even like that's some crazy number, like 10 billion. But how are we going to get there if the government is consistently in the way? So I just keep small positions in these stocks like Avant and like the Planet, but it has to just be extremely small positions because these stocks are extremely speculative. The government sucks, and I don't know what else to say about it other than that, man. So it just is what it is, right? Wynn versus RH. What's going on here? These sorts of things, okay? I posted this on my X page here today. Two rich people stocks headed in different directions. And yeah, these are both rich people stocks, right? Wynn obviously caters to the top 10% of wealthy income earners. RH really does the same exact thing. One's obviously tourist destination, right? Resort company, and the other is a furniture company, right? So I asked this, and some people said things like, Wynn serves the highest end consumers, RH serves the middle class and is being crushed by endless costs. No, not true. RH, like, middle class is not going to RH to go buy couches and dining tables. If you've ever seen the price, no. You got to have some big money behind you to go to RH, right? So I could make an argument that actually Wynn could serve even lower customers, because you could go to Wynn and go play at a slot machine for $5, right? RH is nothing for you unless you're a baller, okay? This individual says, wild how luxury stocks can diverge like this. Makes you think about the different types of rich spending experience versus big ticket items. Point about market rotations feels relevant here. Yeah, somewhat fair, right? I think Emily actually nailed it right here. She says, no one is selling their multi-million-dollar home with a 2.9% mortgage and buying new furniture. Instead, they're going to the Wynn, enjoying their vacations. Fair point, right? That's more right on. That's more right on. Agreed. Like, at the end of the day, when it comes to furniture sales, a lot of people buy new furniture when they move. Whether they move from an apartment to a house or from a house to another house, they go buy a bunch of furniture. They're like, this old stuff, I'm getting rid of it. I'm moving, moving on up. They're out, right? And so they go to RH, but no one's moving. Like, it's just, the market's pretty dead, right? And even on the high end, it's pretty dead. This individual says, furniture struggling for the same reasons as Whirlpool, and no one can afford to move. Yeah, fair, right? Tariffs, who wants to buy furniture? Yeah, tariffs are certainly hurting RH as well. There's no doubt about that. But you could say the same thing in regards to Wynn. And you know why? Because all this tariff drama, all this negativity to Canadians, to Europeans, et cetera, it's definitely produced worse results, at least in the Las Vegas market, for international visitors. Like I live in Vegas, right? Our international visitor numbers have been bad. Like, we've been down, I've seen some numbers like down 6, 7, 8, 9, 10%. So not an ideal situation. So you could kind of blame some of that also, but yet Wynn stock continues to perform. But I'll show you a big reason what's actually going on here. Okay, here's some little gems for you guys. Looking at the balance sheet, RH has $34 million of cash. Now, $34 million, if you're an average person, sounds like an insane amount of money. If you're a multi-billion-dollar company, $34 million is not a lot of money. You're low. This is equivalent of a middle-class person having $100 in their pocket. And it's like, okay, no, let's say not $100 in their pocket, $100 in an emergency fund. And you're like, okay, you got $100 in your emergency fund, good. What is that going to cover? You can't even fix your flat tire for $100 for Pete's sake, okay? These dang Tesla tires keep going bad. Every other day it seems like I have to get new tires, $200, $300 a tire anyways. I don't want to get off subject here, but you're not going to cover much. And so when you got $30 million of cash, like, you're not going to cover a lot when you're a multi-billion-dollar company, right? Additionally, look at how much debt they have. Look at the term loans they have here, almost a $1.9 billion term loan there. This term loan's $467 million, huge. And they have a shareholder deficit of over $40 million. Now compare that to, let's go back 3 years ago and look at the difference versus where this company was 3 years ago. Over $2 billion of cash and cash equivalents. No way. They went from over $2 billion to just over $30 million. That's insane. Look at the stockholders' equity 3 years ago, $1.2 billion in stockholder equity versus a shareholder deficit now. What a turn. And it's because the CEO decided he wanted to do this massive share buyback, one of the worst decisions I've ever seen in corporate history. Horrible. And so now people are worried. They're like, what if the economy got worse? What if housing market? You never know when housing's going to bottom, right? Obviously, you would think housing will bottom sometime soon, right? If mortgage rates start going down. What if that doesn't happen? Could RH go bankrupt? It's a fair question. Like, is it possible? You never know, right? And so this is a company just in a bad situation. Now you look at Wynn Resorts on the other hand, right? Look at Wynn Resorts. This was their latest quarter. Almost $2 billion in cash and cash equivalents. What a difference in the balance sheet. One decided to gamble their balance sheet in a huge way. And guess what? It wasn't the gambling company. Isn't that something? Who would have thought the furniture company would be the big gamblers in the house and decide to gamble their balance sheet on a massive, insane, out of control buyback? While Wynn Resorts, the gambling company, said, we're not going to gamble our balance sheet. Wow. Wow, isn't that something? No, additionally, Wynn has a big property that will be opening in 2027 in the Middle East, right? About a $5 billion budget project was announced back in 22, and it should be opening, I don't know, my guess is some point in the first half of 2027. So we're probably about, I would say about a year and a half out from that property opening. You want some updates on it? Look at that, baby. Some new pictures here. If you want to ever see pictures, you can go to this if you're into Wynn stock, that is. But glass time, baby. They got the glass going on. This is that beautiful property they're building in the Middle East. This is a one of one in that entire region. We know it's going to be a big deal. We just don't know how big of a deal it's going to be in the Middle East, right? But they have nothing like this. There's nothing you could compare this property to in the Middle East when you're talking about an integrated gaming resort that is multi-billion dollars and has gaming in it. Like, there's no comp for this. So it's the closest thing I've seen since Las Vegas Sands opened the Marina Bay Sands in Singapore, which has just been one of the biggest winning resorts in the history of mankind. Like, incredible the profits that resorts put off for Las Vegas Sands over the years. So yeah, it's a big deal, right? By the way, I might go to the Middle East in 2027. I've never been. I might go. I might stay at the property in 2027. I might do it. My question is for everybody out there that travels a lot. Listen, I know there's a lot of you guys that are traveling beasts. Should I do, in the next 2 years, I'm going to probably do a European trip for sure and an Asian trip for sure in the next 2 years, right? Those will be separate trips though. But my question is for the Middle East, let's say I go to this property, maybe go to Dubai as well. Should I do it? You guys know I live in Vegas, right? Should I do it when I do the European trip? By the way, European trip, I'm not going to the UK. I'm not going to France. I'll probably go to Monaco and then I'll probably go to a few cities in Italy. But yeah, I'm not going to go to like a ton of different places in Europe. So I should call it a more European trip. More of an Italy trip more than a European trip, because Italy will probably be the main focus. And then we can talk about Monaco and potentially somewhere in Spain. But should I do Asia, Middle East, or should I do Europe, Middle East? I don't know. You guys let me know. I'll look in the comments, okay, for my traveling beasts out there. Now, there's a big deal in terms of this property opening. And the reason it's a big deal is this is going to be the first property opening without Steve Wynn. It's the first property, right? And some of that might be scary, like, geez, man, the first big property they're opening without the big dog, right? Steve Wynn at the company. But I got to tell you, you guys know I live in Vegas. I just said it, right? I go to the Wynn and Encore all the time. I was just down there 2 days ago for a massage. The spa's amazing. There's been no fall off in Wynn's property since Steve Wynn left. And I was scared about that. I was like, man, Steve Wynn's leaving. Like, maybe the property's going to fall off. Nope. If anything, guys, it's gotten better. The customer service has gotten better. The cleanliness has gotten better. Like, everything's actually gotten better at the Wynn properties since Steve Wynn left. And that's shocking. Because if you see like how much the MGM properties went down after Steve Wynn sold those to MGM, like, it was shocking. They're kind of a joke. Like Bellagio, you ever been to Bellagio Sportsbook? It's the saddest thing you've ever seen. It looks like it's still back in 1998 when they opened the property. Like, they haven't updated anything. It's so depressing. Meanwhile, at the Wynn, they just constantly are refreshing, constantly redoing, constantly keeping things modern, beautiful. There's been no fall off, man. So different companies doing different things out there. PayPal, Celsius, Shopify, these stocks are going to keep going. Then we'll get into my possible buys watch list here. Well, Shopify got big news out here today. So you might have seen it. Etsy popped 16% as OpenAI announces ChatGPT instant checkout for the shopping site. OpenAI announced Instant Checkout, a new feature that will allow users to make single item purchases directly from merchants through ChatGPT. Instant Checkout initially supports single item purchases from US Etsy sellers, and more than 1 million Shopify merchants are coming soon. The feature is available to US ChatGPT Plus, Pro, and free users. So it's a big deal, right? At the end of the day, we know ChatGPT is very popular. We know people are using it for a lot of different things. And we know it's very important that OpenAI makes a lot of money from either ads they're going to serve you up or from purchases, right? Like, at the end of the day, that's how they're actually going to make their big money. People think, oh, they're going to make their big money from subscriptions. No. There's not enough money in that. I mean, there's money in subscriptions, but for a company OpenAI size, for the sort of money they're spending, you've got to fund that through advertisements and commerce. There's just no other way around it. Otherwise, like there's not enough people are willing to pay $20 or $30 a month or whatever that is for a plus subscription. Ask Meta, ask Google, ask anybody that's successful. So you absolutely need ads and you need commerce. And so that's what's going to happen for the next several years. And that's a huge opportunity for Shopify, certainly, right? Now, this is also a big opportunity for Google. So if there's any Google shareholders out there, just understand anything that ChatGPT is doing, Google's going to be integrating that just as well, right? And so when you look, Gemini, which is Google's ChatGPT basically, right? That's number 2 here today on free iPad apps. And then if we look at free iPhone apps, guess what's number 1 in the United States of America? Google Gemini, ahead of ChatGPT. So it's very bullish for Google. Understand any way ChatGPT is going to make money off this, Google's going to make money as well, right? And we still don't know who's going to be the winner here. I mean, a lot of people have thought, oh, ChatGPT's got this easy. Now they're starting to see these numbers as far as what Google's putting up, and now people are like, I don't know. Like, I really don't know if ChatGPT is going to be the winner chicken dinner like we all think. So, the runaway favorite, it could be Gemini ends up coming and beating ChatGPT long term. We'll see what happens there, right? Now, as far as Shopify goes, listen, man, I own this stock in the Patreon portfolio. It's been a tremendous performer for me, up 125%. I have no ambition to sell those shares of Shopify. Like, Shopify feels like one of those companies, and if you run the numbers and projections, like, they have a chance that at some point in the 2030s, they could be $1 trillion company, right? They got to keep putting up these 20 to 30% revenue growth numbers with the bottom line outpacing. And you run those over the next 10 years and you'll get to a very, obviously Shopify will still be able to, command a very high PE at that particular time, like high PE relative to the market, not relative to itself right now. But yeah, like that company just has an extraordinary opportunity. So I have no ambition to sell those shares in the Patreon portfolio, right? By the way, if you're looking to follow my moves in the Patreon portfolio, I always have that linked in the description area as well down there. You can always join me in there. As of right now, I have 5 stocks. Remember, this portfolio just started in 2023. I already have 5 stocks that I'm up over 100% on. Elf, Shopify, Fubo, SoFi, and then Palantir at a shocking 2,169% gain. Insane, right? So imagine how many stocks I'll have in that portfolio 3 years from now, 5 years from now, 7 years from now that will have made me over a double, right? Imagine how many 10x stocks. Like, it's going to be incredible, right? Now, in terms of Celsius stock, listen, I spoke about Celsius stock on a video I put out 4 days ago. 5 ultra high growth stocks to buy. I put out that video 5 days ago. Celsius was one of those 5 stocks I spoke about in that video. Celsius is going to keep running for a long time. Like, obviously, I'll have pullbacks here and there, but at the end of the day, like, Celsius has a massive runway of growth. People will continue to run into Celsius stock. You know why? Because they've got the massive growth rates. The shorter growth rates Celsius will be putting up for this next many quarters is, what people dream about. And so people will continue to flood to that stock and flood to that stock and flood to that stock because of the massive growth rates. And then they'll be thinking about 2027, 2028 margin opportunities and EPS expansion opportunities and et cetera, et cetera. So Celsius is just, that one's going to continue to move and groove. PayPal. What's going on with PayPal? I made $19,000 on this stock so far in the public count. I did take some profits on it a while back. The stock's dirt cheap. It has a forward P of 12-ish. Could the stock continue to run? Sure. But it just needs people to, they've got to show better growth rates. That's all I'll say about PayPal. They've got to show better growth rates. If this company can show 7% revenue growth, people will come flooding the stock because then they'll be looking at it and they're like, 12 forward P, 7% revenue growth, count me in. They got to come through with something better than 5% revenue growth. If they can do that, the world is theirs, right? But people are just unconfident to PayPal, so it makes a move like today, 3.5%, but then people just become not as confident, and then, it's a little struggle. But I got to say, things like ChatGPT getting more serious about monetizing their user base is very bullish for companies like PayPal, companies like Shopify, companies like Etsy. They're going to make a lot of money from that over time, right? And we'll see. An Amazon truck just passed me right now, an Amazon Prime truck. We'll see if ChatGPT eventually gets Amazon involved. I wouldn't be surprised. I don't know. We'll see. We'll see what happens with that, right? But yeah. So anyways, PayPal, it's dirt cheap stock. Like, they just got to show better growth. If they can show better growth, Like you'll see PayPal go $100, $120 fast, but got to show that better growth rates. Okay. Next up here, let's talk about my possible buys watch list in the order of those and why. Okay. So here's my possible buys watch list there. What do you think? I hope you like it. So first stock up here that is my number one that has me the most interested in my entire buys watch list right now is Salesforce, right? This is a somewhat newer position for me. I've added it in the public account. I don't think I've added it in the Patreon portfolio yet. And I believe I've added it in my private portfolios as well. But CRM, I really like that stock right here. It hasn't benefited at all in terms of the stock price from AI. But I believe they're going to actually be a huge beneficiary of AI over the coming years. And I don't think people see it yet. And so I actually like the way they're positioned. And never bet against Benioff, man. Benioff's a beast. Benioff is a beast. So in the stock's been, as far as the valuations come way down from where it used to be as far as trailing 12-month P, forward P. I think the company can grow double digits for years to go in the future. I love it. So yeah, Adobe's my number one right now as far as a stock I want to buy and continue to buy, make it a bigger weighting in my portfolio. Adobe's number two. ADBE, I know a lot of people hate this stock, but I'm like, the company's great. Like, look at the numbers they put up, quarter in and quarter out, phenomenal. Look at the balance sheet. Like the balance sheet, income statement, cash flow, top 10 company in the world. I mean, just incredible. They continue to innovate, right? They're going to push the boundaries on AI. I'm sure they'll make a ton of money from that over the coming years. I like Adobe. Like, I really like Adobe, right? That's my number two. Number three, Amazon. Amazon, this one might be higher, but it's already a huge position for me. But Amazon remains a buy. It remains a buy when you look at the e-commerce business, how much growth that has over the coming years. When you look at the AWS business, right, I think they're going to have a major reacceleration of growth in 2026, which is going to be very exciting. We might even see a glimpse of that actually in this upcoming quarter. That's going to be huge. The ads business has, a long runway of growth ahead of it, right? And then they got all these other smaller businesses that have big opportunities as well, right? And with what they're doing with Bedrock, like that's going to be a big AI beneficiary over the coming years as well when it comes to Amazon, right? Fourth is Google McDougal. Google McDougal, I understand the stock's made a massive move this past 3-4 months. Huge move, right? Google stock is still a buy. Like, look at the forward P of Google. What are we looking at? A forward P of 22? A do-si-do? With the Gemini opportunity, with the most dominant search. Remember, didn't I just show you guys Google's still the sixth most downloaded app on an iPhone on a given day in the USA? Like, it's insane, right? Didn't I just show you guys that a moment ago? Right here. Or right here. Look at this. Google. You think like everybody's got Google already downloaded. Like no one's downloading Google anymore. They already got it. Still the sixth most downloaded free app on a daily basis on iPhone. That's insane, right? By the way, Meta, Threads is number 3. Threads continues to boom. Whew. Like that's a really exciting opportunity, Threads, by the way. But anyways, I don't want to get off subject in regards to Meta. And by the way, Meta's a buy right now too. That would be on my possible buys watch list if it wasn't already such a ridiculously huge position for me in the public account, right? What is it, 1.2 million or whatever, right? Number 5 is Nike. Nike reports earnings tomorrow. I hope they go down. I don't want this. 2026, I have my blessing. 2026, go up, Nike. You go up as far as you want to go. But actually, right now, I'd rather have it go down. I would love to just add a little bit more Nike before the end of this year. And then you do your thing, Nike, okay? But I'm almost done buying Nike, by the way. Just so you guys know, almost done. My hope is this is one last earnings kind of drawdown. And I get one last kind of big buy-in before the end of the year. But we'll see. If it starts going up, it is what it is, right? But that's number 5 there. Number 6 is Cheesecake Factory. Cheesecake Factory remains a buy. Like Cheesecake's a buy every single week. It doesn't matter if the stock's $30, $40, $50, $60. Like obviously, it's a better buy at 30 than it is 60. But regardless, like Cheesecake's a stock that will probably be several $100s in future years as Flower Child gets expanded, as North Italia gets expanded, right? And it looks like rents are struggling in regards to that space. So I wouldn't be surprised if Cheesecake over the next 2 or 3 years here gets some very favorable, like we know Cheesecake's got an incredible opportunity to expand Flower Child and North Italia in mass over the next few years, right? We know they got to build a lot of them. Guess what? The crazy rents, a lot of these, let's just call it locations we're charging in for, basically building a property on it or renting a property on it, right? That's definitely been chilling out. Let's just call it that. Okay. Now, additionally, workers, as far as the economy goes, construction workers is more readily available than certainly it was a year ago or a few years ago at this point in time. So if we're in a weaker construction environment, Cheesecake could then build these North Italias and these flower childs for much cheaper prices than you might have thought, which could be very good. Now, additionally, if the economy is weaker the next 2 or 3 years, which it might or might not, okay? And if it's not and the economy is booming over the next 2 or 3 years, and Cheesecake's the restaurant's going to be doing crazy volumes and crazy numbers, right? But if we're weaker for the next few years, that means the Fed's going to continue to lower rates. You'll eventually see that 10-year yield continue to come down, right? As time ticks on. It's not immediate, but it eventually comes down. And then what you could end up seeing is basically the ability for Cheesecake to then either raise money or take out debt at much cheaper prices is right there, right? So they could expand even quicker, and you can get more workers easier for Flower Child and North Italia concepts, right? So all I'm saying is, like, even if this economy is not what it's cracked up to be over the next 2 or 3 years, it's not the worst thing for Cake. Like, Cake's well positioned either way. Have the economy boom the next 2 or 3 years, they're going to be making fortunes of money. Have the economy weaker for the next 2 or 3 years, they're going to open up massive amounts of Flower Childs and North Italias at much cheaper prices, likely, right? So just something to keep in mind there, folks. Something to keep in mind there. Number 7 of these stocks is SoFi. SoFi stock obviously has been a big runner, but their growth rates are insane. And the long-term opportunity of SoFi is incredible. So it still is a stock I'm very interested in, right? Cava's actually moved up to number 8 now. That stock continues to just get pounded. We'll see. If Cava continues to go down, down, down all the way to Chinatown, I might step in Cava in December or January 2026 and start a position and then build it throughout 2026. But we'll see. We'll see. But that one definitely has my attention. It's moving up the ranks as far as me being interested in buying it, okay? Next one up here, Bath & Body Works. This is number 9 here. Bath & Body Works, such a consistent, great business, low forward PE, profitable, not a business model that's affected that much by a low consumer sentiment. Like, look at the business model. They still put up very, very strong, respectable numbers, even in a poor consumer environment, because they sell soaps and lotions and candles and stuff like that. It's like not complicated, but good business model overall. Whirlpool is my number 10 here. Whirlpool, obviously, I'd started a position, then I sold it off for a profit. I'm keeping an eye on it. I want to see what happens with the November Trump tariff situation. If the Supreme Court's going to overrule that, what's going to happen, okay? So I'm just keeping an eye on it all right now. If things go Whirlpool's way, then I might come in and actually start a decent-sized position, 26, right? And kind of bank on a housing rebound plus those tariffs on the international guys. 11, Planet, spec, obviously. And number 12 is RH. I want to see that one get even pounded harder, though. I want to see it under 150, maybe even under 100, and then we can come in with that one. But it actually has a lot of risk. It's actually RH, borderline a speculative play. I know it sounds crazy, $197 stock, borderline speculative. It is actually right now. All right, guys, appreciate you joining me as always. Focus on the long term. Make sure you're buying stocks that you're going to be proud to own for the next many years, okay? I appreciate you guys for joining me once again. And if you're looking to apply to our private stock group, private wealth group, that will be the pinned comment down there. Access to all my course curriculums, my private Discord chat, see the stocks I'm buying and selling, my nearly $4 million Fidelity account, full access to 1000xstocks.com, the research platform to run your projections on these stocks, figure out if you're getting a great deal, ripped off, all that good stuff. Pinned comment, click on that, fill the form. Let's get you in there. Much love and have a great day.